Now, this is a special. It's a flash update for you all because I know that you're all interested in that special yellow fruit, the banana, for the banana zone. The banana zone is that point when crypto prices go exponential. And while we all love this and our hopes and dreams are all in that yellow fruit, I wanted to get everybody on the same page of understanding so you know where we are and why we're here. So I'm going to run through a selection of charts, many of which you'll never seen before, that gives you a much deeper understanding of what's going on and what we might be able to look forward to ahead.
Raoul Pal has been warning us about the upcoming banana zone, and it seems like it's finally here. Bitcoin is dominating discussions in the financial world, recently breaking past the $80,000 mark and trading around $81,000, up 17% in just the past week. In his latest discussion, Pal explains why he predicted this moment, attributing it to a cyclical trend that has been unfolding since 2008. According to Pal, the key driver behind this 4-year cycle is the changing demographics in society, particularly in the US. The decline of the workforce has forced the government to print more fiat currency to compensate for the shrinking population. While the overall economic outlook may seem bleak, Pal emphasizes that this is the critical moment we've all been waiting for, the time when crypto assets are poised for exponential growth. Let's hear more from Raoul Pal as he elaborates on these insights.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The labour force participation rate in black here has been falling for a couple of decades. That is because the population is beginning to age, and so less people are in the workforce. Now, you can see in pink, it's the births-deaths rate that is actually driving this. So as population growth has been slowing, the workforce slows over time as people get older. Okay, so that's pretty clear. An old population, however, because of the magic formula, less people in the workforce means less GDP. So trend rate of GDP has been slowing. So the economy's been slowing over time. This chart is a chart you'll never see anywhere else, and I think it's the single most important chart in all of global macro. So what is it? It's that same labour force participation rate, but this time it's against US government debt as a percentage of GDP. Now it's inverted here, and what it basically tells you is that as the labour force declines in size, or percentage of people involved in the labour force, the government takes on more debt to offset the growth. This is what it's all about. This is the big economic mess we're in. It's a mess created by demographics that I talked about before. This chart is incredibly important. Now, look at the little divergence recently where government debt has been growing, but the labour force participation rate hasn't. That's the recent influx in immigration in the United States over the last 2 years, where some 6 million people or so have immigrated into the US, and that has kept the labour force participation rate higher, offsetting the retirees. But that's unlikely to continue, particularly with the new government. So what we'll see is the labour force participation rate decline and government debts keep growing. Okay, so we've got all of these massive debts. I've talked to you about the Everything Code. The Everything Code is the servicing of these debts by using liquidity. So liquidity is the debasement of currency. To service these debts, they print more money to service them. It's as simple as that. That is the game we're in. That is the Everything Code game. Let's talk about liquidity, because I think you've heard me talk about this before. It is super important. Liquidity keeps growing. That's the debasement of currency. It's growing at 8% a year. That means the value of scarce assets, S&P 500, real estate, gold, should grow at about 8% a year just because the currency is being devalued. Now, there's another maybe 3% inflation rate to add to this, so 11% is your hurdle for your future self not to be getting any poorer, and most assets just don't do it. But you can see how important it is by this chart that you should have seen before, which is the chart of the NASDAQ versus our global macro investor total liquidity. This is the total liquidity around the world. That's government liquidity, central bank liquidity, and private sector M2 and other measures. So it's the total amount of money printed by the system. And what happens is the NASDAQ is 97.5% correlated to it. That's incredible. The other extra bit that's not correlated that you're seeing now is the secular growth in technology, because technology is a secular trend, because tomorrow is more digital than today. And obviously, Bitcoin, massively driven by total liquidity. This time it's about 87.5% correlated. Reason being, there's a faster adoption curve, exponential growth that happens in Bitcoin or all cryptocurrencies. So that's what lowers the correlation, is in fact the outperformance. But anyway, liquidity drives everything. Now, since 2008, everything has become cyclical, because in 2008, every central bank around the world reset interest rates to zero. It was like a debt jubilee. You don't have to pay your interest, so the world could kind of recover from the debt blow up of 2008. And for about 10 years, we had zero interest rates. And what the governments did is they reset all of their debts to between 3 and 5 years. That cycle has created a perfectly cyclical business cycle. The ISM, the Institute of Supply Managers survey, what we've got here is in black is the current cycle, which is it's currently at its lows, but the forward-looking is actually just the previous cycle moved forwards and inverted, because it keeps repeating the same cycle. So that same cycle is repeatable and understandable and forecastable. Sure, the wiggles may change, the direction will be right. And it's driven by this. This is the distribution of debt in the United States. If you look at the first two boxes, well, that's what 72% of the entire debt structure is 1 to 5 years, which is what I talked about before. This is what's causing the cyclicality that you see in the economy and these 4-year cycles. So because they're using the liquidity to manage the debt, the rollover years, which tends to be this yellow and the kind of weird peachy color, the summer and fall, those are when the peak debt rollover happens. So they add lots of liquidity. So if you look at that, you can see the liquidity piling into the system as they start rolling those debts over, and they need to print more money because they have to issue new debt to pay the interest on the old debt. Sometimes they use a central bank balance sheet. Other times they just create liquidity, and it's done on a globalized basis. Right now, China's the big liquidity driver. And then you get those blue years, which are the winter years, when they start withdrawing liquidity because they don't need to service the debts because there's no debts around those periods of time. So that's why we get this cycle. And this cycle creates the Bitcoin cycle. It actually corresponds with the presidential election cycle and also the Bitcoin halving cycle. They're all those summer months. The summer months tend to be pretty strong. You can see the previous examples, 2012, 16, 20, all good months, all good seasons or years. And then fall tends to be very strong. The fall in 2021 was still strong, but it had a stunted cycle because liquidity was starting to get withdrawn because they put so much in. But if you look at 2017 and 13, they were gigantic. So the fun is yet to come. When you look at it in year-on-year terms, you can see the cyclicality and how related Bitcoin is to global liquidity and how the seasons dictate that. So what we're looking forward to is the big rises in price ahead.
We're entering the banana zone. Do you agree with Raoul Pal's thesis on how the market will perform based on demographic trends? Share your thoughts in the comments if you found this content valuable. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.